In this example video, we're going to look at putting together our financial statements. Keep in mind, we have to do our financial statements in a particular order. So we always start with our income statement, followed by our statement of stockholder equity, and then finally our balance sheet. Reason for that is the last line item that we list in each financial statement and the value associated with that line item is then brought with us and affects the next financial statement that we have. So we start with our income statement. Our income statement shows us what we've earned the rights to in assets for providing services to our customers, that being our revenues, versus what we had to use in assets to keep our business running and operating and to generate those revenues, so those items being our expenses. So we always start our income statement with our revenues, so looking at the information that was provided to us. Our revenues, which again represents how much we've earned for providing services to our customers, is our fees earned account. We're charging our customer a fee, but we've already earned it. We've provided the service to our customer. So in this situation, we have earned $875,000 in our revenue. Our expenses, anything that ends in the word expense is therefore an expense. And we always list our expenses in order of greatest to least, with miscellaneous expense coming last. So when we're looking at the expenses that we have here, our most expensive expense is our wages expense for $525,000, followed by our rent expense at $75,000, then our utilities expense at $38,000. We also have a supplies expense at $12,000. Our tax expense at $10,000. And then finally our miscellaneous expense, always coming last no matter what that value is, at a total of $15,000. Remember, our financial statements have subtotal and total columns. So the reason why we see our fees earned in that far right column is because we only have one total revenue. So it goes right into our total column. Since we have more than one expense, we need to add up those total expenses, and that total value is going to go into our total column. So we add up our total expenses, and in total we have $675,000 in total expenses. We now need to determine if we have a net income or a net loss. So we have a net income when our total revenues exceed our total expenses. We have a net loss when our total expenses exceed our total revenues. In this case, we've earned $875,000 in revenues, and we had a total expenses of representing assets that we've used of $675,000, which means we have a net income of $200,000. Again, we always need the last item that is listed in a financial statement to help us put together our next financial statement. So our net income is going to affect our statement of stockholder equity. So looking at our statement of stockholder equity, when we think about our stockholder equity, we roll it into two accounts. Common stock, which represents assets that have been invested into the business by the owners in exchange for ownership rights, and retained earnings. And when you're thinking about retained earnings, it's how much of our earnings, meaning our net income, has the company retained or kept in the business versus how much have they given away. So the first thing that we're going to start with is the balances at the start of the year. So our title in the heading is for the year ended April 30th, 20Y7. So that means the company's fiscal year, which is any 12 consecutive months that a company does their financial reporting, runs from May 1st to April 30th. And if you're ever trying to figure out how to come up with your years and when they begin and when they end, if you know that it does April 30th, 20Y7, if you want to find your first of that fiscal year, go 1 day forward and 1 year back. So May 1st would be the next day after April 30th and go 1 year back. So we want to put in those beginning balances. So they tell us in the information that was provided was that common stock was $25,000 and retained earnings was $155,000 at the start of the year. So we want to enter in those values. So we have our $25,000 in common stock, and we have our $155,000 in retained earnings. So at the start of the year, we had total stockholder equity of $180,000. If we look at the information provided, it tells us that during the year, additional stock of $10,000 was issued, and we had dividends of $40,000 that were paid out. So we want to put in the common stock that was issued. Each line item is only going to affect common stock or retained earnings, but it's always going to affect our total value. So we had $10,000 in common stock, and that means that our total is going to go up by $10,000. We also had a net income. Net income is affecting our retained earnings. How much of our earnings are we retaining in our business versus how much are we giving away? And what we give away are dividends. So dividends are basically giving our stockholders kind of like a thank you for investing in our business. So we're giving them back a little bit of our earnings. And they told us our dividends were $40,000. Please note in the directions, it says if a net loss is incurred or dividends are paid, enter the amount as a negative number using a minus sign. So we have to do that minus $40,000. So that's going to help us get to our ending values in our columns here for common stock, retained earnings, and in total. So for our common stock, we started the year with $25,000. We added another $10,000, so we have $35,000 in total. For retained earnings, we started with $155,000. We increased that by the $200,000 in net income that we had, but then we gave some of that back. We're not retaining all of that. So in the end, we have $315,000 in our retained earnings, which means in total at the end of our year, we have $350,000 in total stockholder equity. We need all three of those values to be able to put together our balance sheet. So our balance sheet represents our accounting equation. Assets have to equal our liabilities plus our stockholder equity. So our assets are any resources that we own and control in the business, and we always list those assets in order of liquidity. And what we mean by liquidity is how quickly we could convert those assets to cash for our business. So looking at the information that's provided, we have cash, and we have cash of $156,000. So cash is always our most liquid item that we have in terms of our assets because it's already in its most liquid form. Looking back at the information, we also have accounts receivable. So accounts receivable represents cash that we will receive sometime in the future for services that we have already provided to our customers. So that would be our next most liquid asset. And finally, we had supplies of $9,000. So our supplies of $9,000 gets entered. You'll notice up here that we have a supplies and we have a supplies expense. So the expense represents any supplies that we've actually used to run and operate our business. The supplies account, which is our asset account, represents how much supplies we still own that we haven't done anything with just yet. So in total, we have $375,000 in total assets. Next are our liabilities, and our liabilities represent anything that we owe to someone else. So it doesn't necessarily have to be cash that we owe. It could be services that we owe sometime in the future, but many times it will be cash. So we have accounts payable. We need to pay someone sometime in the future for something that we already have in our possession. So think about accounts payable kind of like your credit card. You go to the store, you buy something, you use your credit card. You haven't actually paid any cash out of your checking account for those items. You will pay that sometime in the future. So we have our accounts payable for $25,000. The final section is stockholders' equity. And if we want to know our stockholders' equity, we go to our statement of stockholders' equity. And remember, our balance sheet is as of April 30th. So we want our values for our two components of stockholders' equity, which is common stock and retained earnings, as of April 30th. So common stock, we said at the end of the year was at $35,000. And we said our retained earnings was at $315,000, which means our total stockholder equity was at $350,000. We now need to add together our liabilities and our total stockholder equity, and we do that and we get $375,000, and that equals our total assets.